Everyone, please welcome the Chair of the FSOC, Secretary of the Treasury, Janet Yellen.
Good afternoon, everyone. I'd like to call this meeting of the Council to order, and I want to begin by welcoming a new Council member, Rohit Chopra, who was recently confirmed as Director of the CFPB. Turning to the agenda, we will cover two items today. First, we'll hear a presentation and then take a vote on the Council's report on climate-related financial risk. Then we'll vote on the minutes of our last meeting. So let's turn to our first agenda item, the discussion of the draft FSOC report on climate-related financial risk. I'll turn it over to Eric Juzanis for the climate report presentation, and Sean Hoskins is also available for questions.
Thank you, Madam Chair, and members of the Council. Sean and I are honored to appear before the Council today to present the FSOC report on climate-related financial risk. In the report, the Council identifies climate change as an emerging threat to the financial stability of the United States. Domestically and globally, climate-related impacts such as warming temperatures, droughts, wildfires, storms, and other climate-related events are intensifying even as they already impose significant costs upon the public and the economy. The economic and financial consequences of ongoing climate change are likely to be an increasing source of shocks to the financial system and threat to financial stability. A primary responsibility of the Council and its members is to ensure the financial system's resiliency to risk, including to climate-related risks. This report provides recommendations laying out steps for FSOC and its members to identify and address climate-related risks to the financial system, as well as promote the resiliency of the financial system to those risks. FSOC seeks to identify and respond to vulnerabilities in the U.S. financial system so that shocks to economic or financial conditions do not impair the ability of the financial system to provide needed services, including the clearing of payments, the provision of liquidity, and the availability of credit. The assessment of climate-related financial risks involves a series of steps. First, defining climate risks and how they may affect the financial sector. Second, quantifying the effect of climate risks on economic activity. Third, evaluating the links between economic impacts and financial risks. And fourth, assessing the financial stability implications of climate-related financial risks. To facilitate the execution of these steps, as discussed in the report, climate-related financial risk can be grouped into two broad categories: physical risks and transition risks. Physical risks refer to harm to people and property arising from acute climate-related disaster events, as well as longer-term chronic phenomena like higher average temperatures, changes in precipitation patterns, sea level rise, and ocean acidification. Transition risks refer to stresses to institutions or industry sectors caused by shifts in policy, consumer and business sentiment, or technologies that are associated with the changes necessary to address climate change. If these changes occur in an abrupt or disorderly way, the impact on firms, market participants, individuals, and communities is more likely to be disruptive. FSOC's approach to identifying and addressing risks is well suited to integrating climate-related physical and transition risks. Because in the financial system, these risks manifest as risks to institutions, such as credit risk, liquidity risk, market risk, and operational risk. These risks have long been the focus of supervision and regulation by FSOC members. To identify and address these risks within their mandates, FSOC member agencies have taken steps to begin incorporating climate-related financial risk into their regulatory and supervisory activities, steps to enhance climate-related disclosures, and steps to assess climate-related risks to the financial system. Progress has been made. There is a substantial amount of work yet to be done, as reflected in the report's analysis and recommendations. First, the report describes how FSOC and its members should build capacity and expand efforts to address climate-related financial risks. The Council will form a new staff-level committee, the Climate-Related Financial Risk Committee, to focus on climate-related risks and help coordinate efforts across members to assess and respond to them. The Council will also form a Climate-Related Financial Risk Advisory Committee, which will help the Council gather information and analysis from a broad array of stakeholders on climate-related risks. The Council recommends that its members prioritize internal investments to expand their respective capacities to identify, measure, assess, and report on climate-related financial risks and their effects on financial stability. This includes investments in staffing, training, expertise, data, analytics and methodologies, and monitoring. The Council also recommends that its members enhance public communication related to their climate efforts, including in annual reports and other relevant reports that they publish. Second, the report describes how the measurement of climate-related financial risks requires additional data and methodologies that may be new to financial institutions, investors, market participants, and regulators. The Council recommends that its members identify and take steps to ensure they have access to consistent and reliable data for assessing climate-related risks. Members should perform an internal inventory of currently available data and develop plans for acquiring additional data they might need through data collection, data sharing arrangements, or data procurement. FSOC members should also work together to develop consistent data standards, definitions, and relevant metrics. Third, the report describes how public climate-related disclosures that offer meaningful information about climate-related financial risks fosters increased transparency into those risks. These disclosures in aggregate can also facilitate market efficiency by allowing climate-related risks to be better priced into financial markets. The Council recommends that its members review their existing public disclosure requirements and consider updating them to promote the consistency, comparability, and decision usefulness of information on climate-related risks and opportunities. In doing so, members should consider requirements that build on the core elements of the Task Force on Climate-Related Financial Disclosures framework. The Council also recommends that FSOC members issuing requirements for climate-related disclosures consider whether such disclosures should include disclosure of greenhouse gas emissions as appropriate and practicable in order to help determine exposure to material climate-related financial risks. Lastly, FSOC members should evaluate standardizing data formats for climate disclosures to promote comparability. Fourth, the report describes the assessment of climate-related financial risks and their implications for financial stability. The Council recommends its members use scenario analysis as a tool for assessing climate-related financial risks. The Council also recommends its members consider using common scenarios that build on existing work by international bodies such as the Network of Central Banks and Supervisors for Greening the Financial System and the Financial Stability Board. To help address climate-related financial risks, the Council recommends that its members should review their supervisory and regulatory tools to evaluate whether additional or updated regulations or guidance specific to climate-related risks are necessary to clarify expectations for regulated or supervised institutions regarding management of those risks. Finally, the report emphasizes that the adverse effects of climate change may disproportionately impact financially vulnerable populations, which can include lower income communities, communities of color, and other disadvantaged or underserved communities. Council acknowledges that the impacts of climate change on these communities will require thoughtful and balanced policy responses. Developing these will take a coordinated approach involving stakeholders from across the public and private sectors. While the report's recommendations represent important steps to address climate-related financial risks within FSOC member agencies' mandates, additional work will be required. The climate-related financial risk community will update the Council at least semi-annually on the progress of the Council and its members in addressing climate-related financial risks. These updates will be used to assess progress against the report's recommendations in the FSOC's annual report. The report and accompanying recommendations demonstrate the FSOC's commitment to building on and accelerating existing efforts to make the financial system more resilient to climate-related shocks and vulnerabilities. It will also help ensure that the financial system can support an orderly transition towards a net zero emissions economy. Thank you, Madam Chair and members of the Council. Sean and I are happy to answer any questions.
Thank you very much, Eric. Today is an important day for FSOC. We're publishing our report on climate-related financial risk. And for the first time, FSOC is recognizing that climate change is an emerging and increasing threat to U.S. financial stability. This report puts climate change squarely at the forefront of the agenda of its member agencies, and it's a critical first step forward in addressing the threat of climate change. It will by no means be the end of this work. I think it's worth taking a few minutes to place this body of work into proper historical context. This council, as we well know, was established in the aftermath of the 2008 financial crisis with the goal of preventing such a crisis from ever occurring again. Over the past decade, we've made meaningful progress building the oversight infrastructure to protect against another such event. But as the maxim goes, we cannot simply fight the last war. We must look forward. That's our responsibility under the Dodd-Frank Act, which gave this council the duty to respond to emerging threats to the stability of the United States financial system. Today, we're recognizing a unique existential risk for the planet that will affect every aspect of our lives and the lives of our children, including through effects on the financial sector. It doesn't require a vivid imagination to see how climate change could threaten the financial system. As climate change intensifies, more frequent and severe climate-related events, wildfires, tropical storms, and flooding, for example, could trigger declines in asset values and economic activity that could cascade through the financial system, especially if such risks are not properly measured and mitigated. Moreover, the economic adjustments required to address climate change are large, and they need to begin soon, including through smart government policies to facilitate the transition to a net zero economy. If such policies are delayed and later implemented in an abrupt, disorderly fashion, a rapid revision of perceptions could lead to sudden and dramatic effects on economic activity and asset values. The longer we wait to address the underlying causes of climate change, the greater is this risk. Responsibility of this council is to ensure the resilience of the financial system to the future impacts of climate change. We have identified climate change as an emerging threat to the financial stability of the United States. But we must be crystal clear that an emerging threat is not the same as a hypothetical one, and it would be foolish to confuse the two. It's challenging to predict the future impacts of climate change precisely, but we know that climate change has already started causing an array of economic harms, and failure to address climate-related financial risks will only allow them to grow larger. Indeed, the costs of climate change are increasingly impacting households' expenses, income, and homes, as well as corporate balance sheets. As we were drafting this report, Hurricane Ida tore through the middle of the country, displacing thousands of people in small rural towns and leaving New Orleans without power for an extended period. This was unfortunately only one example of extreme weather events, almost surely tied to climate change, that we witnessed over the few months during which we drafted the report. We also saw a record heat wave in the Pacific Northwest. Wildfires tore across the American West to a degree unimaginable to many of us just a few years ago. The events of this summer are an all too unfortunate reminder of why today's report is critical. The report makes recommendations for how council member agencies can more effectively respond to these particular climate-related risks, what we term the physical risks, as well as the transition risks of the necessary shift to a lower carbon economy. In total, the report contains over 30 specific recommendations. Generally speaking, they fall into 5 main areas. First, assess climate-related financial risks to financial stability, including through scenario analysis, and evaluate whether revised or new regulations or guidance is necessary to properly account for these risks. The future is inherently uncertain, and scenario analysis is one promising tool that has been used internationally to assess these risks. At the same time, regulators need to consider whether existing guidance should be adjusted or new guidance or regulations considered to ensure proper management of climate-related financial risks. We can't wait for perfect assessments or data to take action. Second, promote enhanced climate-related risk disclosures. In a well-functioning and transparent market, we might see investors and firms naturally transitioning away from investments that pose excessive climate-related risks if those risks are mispriced. Often the reason they aren't doing so is because they do not have the relevant information. Enhanced climate disclosures can address that information failure, enabling market participants to make decisions with more complete data. Third, enhance climate-related data to allow better risk measurement by regulators and the private sector. The climate is changing, and some risks may manifest in new and unprecedented ways. We need to fill data gaps and better integrate climate, economic, and financial data to improve our understanding of and exposure to climate risks. Fourth, build capacity. Analyzing all this information and coordinating the response among the council's member agencies requires more resources. For that reason, the report recommends establishing a staff-level climate-related financial risk committee within FSOC. That committee will serve as an organizing body for FSOC agencies to share information and collaborate on this issue. It's important to note that this report is not exhaustive, nor is it the final word from this council on this urgent priority. Instead, it's just a first step. As our capacity to respond to climate change increases, as our base of information expands and our reservoir of expertise deepens, we expect to formulate new strategies to address this emerging threat to financial stability. Finally, I should stress that our most financially stable future is our most environmentally sustainable future, one where we have transitioned to a low carbon economy. Many institutions and individuals in and out of government are tasked with facilitating that future. And I'd add on a personal note that I consider myself one of them. As chair of this council, as secretary of the Treasury, and as a resident of this planet, I believe it's my task to hand down a livable and financially prosperous world to future generations. And I know that many of you feel the same. I'm very hopeful that future generations will favorably judge our efforts. Thank you. And with that, I understand that many of you would like to say a few words. Let me call on Chair Powell to start us off. Jay.
Thank you very much, Madam Secretary Janet, for those inspiring words, and thanks for your leadership on this important issue. Climate change poses significant challenges for the global economy and the financial system. The public rightly expects us to work to ensure that the financial system is resilient to climate-related financial risks. We appreciate that the magnitude of the challenges ahead of us are large, and the Federal Reserve is committed to doing our part. I want to thank all involved for the work on this comprehensive report, which I'm happy to support. Its recommendations highlight areas where additional work and coordination are needed to increase our collective understanding of climate-related financial risks. The report also emphasizes the need for consistent and comparable data and disclosures, something I particularly appreciate as fundamental to a rigorous and thorough analysis of climate-related risks. The report cites scenario analysis, where the resilience of financial institutions and the financial system are assessed under different hypothetical climate scenarios as an emerging tool in assessing climate-related financial risks. And at the Fed, we're developing a program of scenario analysis to evaluate the potential economic and financial risks posed by different climate outcomes, different paths. So we'll share our progress and look forward to coordinating with our FSOC colleagues in meeting the critical challenges outlined in the report. As we advance in our understanding of the financial stability risks associated with climate change and gain experience with early policies to strengthen the system, we will continue to work together with our domestic and international colleagues to sharpen our responses. Thank you.
Thank you, Chair Powell. Acting Controller Sue.
Thank you, Madam Chair, and to the FSOC and interagency staff for today's excellent and timely presentation and the work underlying it to address climate change. I too fully support the FSOC's climate change report and its recommendations. The report provides valuable information on the risks climate change poses to OCC-regulated institutions, as well as to the entire financial system. The report's recommendations provide a clear framework and lay out concrete steps for the OCC, FSOC, and other FSOC members to take to better measure, monitor, and address climate-related financial risks. At the OCC, we are especially focused on the safety and soundness risks to banks from climate change. This starts with sound risk management. We are learning a lot by collaborating with peers, participating in international forums like the Basel Committee and the Network for Greening the Financial System. Building on that, in the FSOC report's recommendation, we are developing high-level climate risk management supervisory expectations for large banks and hope to issue framework guidance in the near future. Finally, I greatly appreciate the report's focus on the disproportionate potential impact of climate change on disadvantaged and financially vulnerable communities. In many cases, these are the same communities that have been adversely impacted by the pandemic. Bearing this and inequality challenges in mind is important as we tackle climate change risks. The OCC is strongly committed to acting on the risks that climate change presents to the financial system and will approach this issue with the urgency it warrants. The FSOC climate change report provides an excellent roadmap for us and the other FSOC members. Thank you for your leadership on this issue.
Thank you. Chairman McWilliams.
Thank you, Secretary Yellen. Climate change presents significant challenges for our society. Severe weather events have devastated communities across the nation. And as someone born in a country far less economically developed than the United States, I also recognize the disproportionate impact of climate change on countries with few resources. At the FDIC, we have long required financial institutions to consider and appropriately address potential risks posed by the climate in their operating environment. We have seen banks adapt their underwriting and risk management practices in a variety of ways in response to hurricanes, wildfires, and droughts. As a bank supervisor, deposit insurer, and resolution authority, the FDIC has undertaken numerous efforts to better understand and address these issues. For example, for the first time in the agency's history, we incorporated climate change research as a corporate agency-wide goal last year. The specific impact of climate change on individual banks, their customers, their communities, the financial sector, and financial stability of the United States presents extraordinarily complex questions. If these issues were easy, we would have solved them long ago, which brings me to the report before us today. The FSOC had a very short period of time to prepare and issue a report on climate-related financial risks, including making recommendations related to processes for identifying climate-related financial risks to the financial stability of the United States and how such risks can be mitigated. The FSOC staff did what it was asked to do. This report was indeed a colossal undertaking, and I would like to thank the FSOC staff for the tremendous amount of work that went into its preparation. In light of the complexity of these issues and the limited time to produce a report, I believe that FSOC has not had an adequate opportunity to conduct sufficient analysis, fully consider broader macro consequences, and thoroughly evaluate the impact of its recommendations. As a result, I'm concerned the report is premised on a number of conclusions that warrant more thorough examination. While I will abstain from voting on the report, I will continue to work with the FSOC and our fellow regulators on these crucial issues. I would like to take one more opportunity to thank FSOC staff for their willingness to consider feedback and comments offered by FDIC staff. Thank you, and I look forward to continued engagement.
Thank you. Chair Gensler.
Thank you, Secretary Yellen. Thank you for your inspiring remarks as well. I'd like to thank my fellow members of the FSOC and the many staff who collaborated on this report. I support this thoughtful and, if I might say, thought-provoking report discussing how climate risk could manifest in actions the council members are taking within their authorities. I encourage the public to take a look at this report closely. As is mentioned in the report, given the Securities and Exchange Commission's mandate, I've asked staff to work on two important projects related to climate risk disclosures. One relates to public companies, and the other relates to investment funds. First, on public companies, we've had a sort of basic bargain over the 90 years of the SEC that investors get to decide what risks they take, but companies raising money from the public have an obligation to share full and fair information with investors on a regular basis. What investors have wanted over the decades changes. We've added management discussion and analysis, executive compensation, other disclosures. Well, in the 2020s, investors want to know more about climate risk. Thousands of companies around the globe already provide such information to investors on a voluntary basis, but I believe the SEC has a role to play in cases just like this to facilitate consistent, comparable, decision-useful disclosures from companies on a mandatory basis. The markets then can make their decisions better, more efficiently. This helps investors. It also helps companies. Thus, the SEC staff is providing and preparing recommendations for our 5-member commission. The second area relates to funds. Today, a lot of funds are marketing themselves as sustainable, green, and the like. For the past 80 years, the SEC has had rules to govern such naming of funds. I think we ought to consider updating those naming rules, enhancing the disclosure so that investors can see what data, what methodologies, what criteria stand behind these names and claims. And subject to the commission deliberations, any such proposals would be put out with all the economic analysis to the public comment. I look forward to hearing that comment. I look forward to continuing to collaborate here, and I thank you all.
Thank you very much, Gary. Next, Acting Director Thompson.
Thank you, Madam Secretary. I commend the Council for undertaking this important first step towards addressing the potential effects of climate change on the financial stability of the United States. I support the Council's recommendation to increase and prioritize efforts to improve our capacity to understand, assess, and address climate-related issues. I share the Council's view that current challenges on data limitations and incomplete tools cannot justify inaction. To that end, I commit to working collaboratively with other agencies to implement the recommendations. FHFA recognizes the central role its regulated entities play in the housing finance market. Our objective is to ensure that our regulated entities remain safe and sound while serving their housing finance missions and providing leadership to the market in addressing both climate-related physical property risks and transition risks that may accompany the move to a low-carbon economy. FHFA also recognizes the need to coordinate and collaborate with the other agencies and stakeholders to develop solutions that address and are responsive to the needs of underserved and vulnerable communities. We will also work to improve public awareness and transparency of climate and natural disaster risks to help ensure that all participants in the housing finance system have access to the information needed to make informed decisions. We will also ensure that our regulated entities know how important it is to consider the effects of climate change in their decision-making. These are important initial steps, but there's still a great deal of work to be done. FHFA stands ready to work with all who share the goal of building a stronger, more climate-resilient housing finance system. Madam Chair and fellow members of the Council, I look forward to continuing to work with you on these and future matters. Thank you.
Thank you. Director Chopra.
Thank you, Madam Chair, and thanks to members of all the Council. You know, throughout history, policymakers and regulators have often exacerbated the pain and costs of crises, including financial crises, by acting too late. And when regulators fail to prepare or to use their tools to reduce the likelihood and impact of those crises, the pain is disproportionately borne by those least able to bear those costs. Indeed, the Consumer Financial Protection Bureau was established within the Federal Reserve System in part to address how regulators missed some of the important linkages whereby problems in mortgages would rebound through the financial system. Catastrophic weather events and destructive environmental shifts have clear impacts on our economy and the resilience of our financial system, particularly in our globally interconnected world. For families, these shocks can threaten their homes, their jobs, their businesses, and their farms. Indeed, one analysis of a 1999 natural disaster in Taiwan ultimately led to factories closing here in the United States, in Texas and California and more, due to the ripple effects across global commerce. Floods, wildfires, hurricanes, and droughts are occurring with intensifying force and increasing frequency. Many homeowners across the country will face decreasing property values, unaffordable or unavailable insurance, and skyrocketing repair and maintenance costs, undermining household financial stability. Ensuring housing security has been a top priority for the CFPB during the pandemic, and it will also be central to any work on climate change. While I have just joined the council, I look forward to closely studying the report to learn about how the actions my fellow council members and agencies have already taken, evaluate the potential impact of the report's policy recommendations, and assess what further steps are necessary to proactively address systemic risk. After a devastating financial crisis and now a global pandemic in the span of such a short time, families, small businesses, and neighborhoods across the country simply cannot afford for us to act too late. Thank you, Madam Secretary.
Thank you. Acting Chairman Benham.
You, Secretary Yellen. First off, I want to thank and applaud you for your leadership on this issue and raising this as a priority for this council. It's critically important, and as you point out, time is of the essence. So this is a great first start, but it is, as you stated, a first step, and there will be many more. And we certainly at the CFTC look forward to contributing to the work of the council and adding value where we can. I do want to thank the staff for putting the report together, taking our suggestions, and getting us to where we are today. It was certainly a difficult challenge, but very proud and happy to support the report itself and all of the recommendations. And I would say from a CFTC perspective, we are certainly looking forward to building on the work that we've done. And as many of you know, we are at our heart a price discovery and a risk management agency. And those are two key elements of the risks that we are going to face, both physical and transition. In order to have an orderly transition and to mitigate the impacts of these physical climate events that we're facing on a more frequent basis, I firmly believe CFTC markets will play a key role in conducting this orderly transition in the short term, in the medium term, and the long term. And certainly look forward, as I said, to working with you, Madam Secretary, and the Council to fulfill this larger goal of addressing this existential crisis. Thank you very much.
Thank you very much. Chairman Harper.
Thank you, Secretary Yellen. I join my fellow council members in thanking the staff at FSOC and each of our agencies who worked on this timely analysis. The final report, which I support, discusses the financial risks that stem from climate financial risk and how they might play out in our economy and our regulated entities. At the NCUA, we have established a climate financial risks working group to develop in-house expertise on climate-related financial risks and explore the implications for credit unions, credit union members, and the National Credit Union Share Insurance Fund. Consistent with the law, we will use our findings to help ensure that federally insured credit unions remain resilient against climate-related financial risks so that they can continue to serve their more than 125 million members. Although today's report represents progress in understanding climate financial risk, there remains a tremendous amount of work to do in this area at the NCUA and across the financial sector. As such, I look forward to collaborating with FSOC staff and my fellow council members to ensure our financial system remains resilient to climate financial risks. Thank you.
Thank you. Our next independent member, Workman. You're on mute, Thomas.
Everywhere. Unmute?
Good.
Okay, good. Thought I had one place to unmute. Okay, good. Thank you, Madam Secretary. This climate report to be issued by the Council, I believe, focuses rightly on the need for more targeted and better defined information on climate-related financial risk. Policymaking on a topic far-ranging and important as public policy responses to these risks should be grounded on comprehensive, well-defined, and thoroughly evaluated data. Transition from carbon-intensive economic activities to sustainable, resilient energy sources will similarly benefit from this robust and deeply considered data sets and disclosures sought pursuant to this report. I look forward to seeing the fruits of this vital information gathering process and its subsequent consideration by the council. Thanks very much.
Thank you, Director Seitz.
Good afternoon. First, I would like to also express my thanks to the FSOC team for all of their efforts in producing today's report on climate-related financial risk. I'd also like to thank the staff at the various FSOC members, as well as our own team at the Federal Insurance Office for all of their efforts. This report is an important step by the Council to address climate-related risks to the financial system and promote the resilience of the financial system to those risks. This report also highlights the important role of the insurance sector in this area. Addressing climate-related financial risk is a top priority for the Federal Insurance Office. Earlier this summer, the Federal Insurance Office issued a request for information to solicit public input on FIO's future work on the insurance sector and climate-related financial risk. Request for information highlights FIO's climate-related priorities, including assessing climate-related issues or gaps in the supervision of insurers, assessing the potential for major disruptions of private insurance coverage in U.S. markets particularly vulnerable to climate change impacts, also increasing our engagement on climate-related issues. FIO looks forward to working with the rest of the council members and their teams as we continue our work on the important issues that were highlighted in the report. Thank you, Madam Secretary.
Thank you. Director Felischetti. Director Felischetti.
Yep, just bring up my screen.
Oh, okay.
Thank you, Secretary Yellen. Congress established OFR to support FSOC and its member agencies with data and analysis to better gauge and understand complex risks to financial stability. Climate is one such risk and an increasingly prominent one. Associated models can point to long-term changes, but data gaps between climate and economic models can impede a fuller understanding of how climate change can translate into deeper or broader risks. Turning to the President's executive order, I'm having some computer troubles here. Turning to the President's executive order, the OFR has taken several steps to address its directives. First, the OFR has performed a survey of relevant commercial data vendors, government agency data sets, academic data hubs, and other key sources to identify, categorize, and share climate data with FSOC and its members. In doing so, OFR has begun to identify data gaps that, when filled, could better link climate change and financial stability. This work includes a pilot program initiated to serve as a climate data hub with another FSOC member. And finally, our office will continue to further its contributions to interagency analyses and information exchanges. Throughout, we will monitor, analyze, and share what we see with our FSOC colleagues. With that, I yield back.
Thank you. And Commissioner Cooper.
Thank you, Madam Secretary. I would also like to add my thanks to Treasury staff and the other FSOC member agencies for their work over these past few months to produce this report. It is very important for the banking industry to proactively manage and address climate-related financial risk. So too is it important for bank supervisors to speak and act in a unified manner as we work with our institutions to ensure that climate-related financial risks are appropriately assessed and managed. Fortunately, we have established mechanisms to ensure supervisory processes for banks are clear and consistent, including working through forums such as the FFIEC. So I encourage the federal banking agencies to utilize the FFIEC to ensure that our supervisory expectations for climate-related financial risk are consistent. In doing so, I am confident that we will demonstrate our ability to work together toward a common goal, as we have done in the past in tackling other novel challenges and risks, including most recently our response to the COVID-19 pandemic. Thank you, Madam Chair.
Thank you. Are there any other questions or would anybody else like to comment? Okay, seeing none, is there a motion to approve the resolution approving the council's report on climate-related financial risk?
So moved.
Is there a second?
Second.
All in favor, say aye.
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 All opposed, say nay. Any abstentions? Chair McWilliams.
Yes.
Okay.
One abstention. Thank you.
Thank you. The resolution is approved. Our last agenda item is to vote on the minutes of the council's last meeting. Is there a motion to approve the resolution approving the minutes of the September 9th, 2021 council meeting?
So moved.
Is there a second?
Second.
Second.
All in favor, say aye.
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 Any opposed, say nay. Any abstentions? Resolution is approved. And before we adjourn, I'd like to note that this is the last council meeting for the executive director of the council, Steve Ledbetter. I'm grateful to Steve for his many contributions to FSOC, and we all wish him well in his retirement. Sandra, I understand that you wanted to say something.
Yes, Secretary, I just wanted to take this opportunity to thank Steve publicly for his public service over the years, not just on the FSOC, but also at the FDIC and other agencies that he's worked. I had the distinct pleasure of working with Steve over the years, and he is just a dedicated, committed, and just a wonderful person to work with. And he has substance and has worked on several issues for the council and other resolution-related activities. So I wanted to take this opportunity to publicly thank him for his public service and wish him well in his retirement.
Thank you, Sandra. And I know all of us who've had a chance to work with Steve feel exactly the same and wish him well. Is there any other business? Okay, if not, can I have a motion and a second to adjourn the meeting?
So moved.
Second.
Second.
Thank you, everyone. The meeting is adjourned.
Thank you.
Thank you.
Thank you.